without further ado, I would actually like to invite on stage our next fireside chat sponsors, TRM Labs. So thanks again, TRM Labs, for actually being a part of this and making it happen. And with Jack Schickler, having a nice chat with our Ari. Thanks so much. A big round of applause. Thank you.
Thank you very much for joining our fireside chat. We can't afford the fireside due to energy bills in Europe right now, but you'll just have to make do. I'm still Jack Schickler, regulatory reporter at CoinDesk.
Yes, Ari Redbord from TRM Labs. Really nice to be here with you.
And we're here for the next 30 minutes or so to discuss compliance in the age of DeFi.
Let's do it.
Which I'm now told should be pronounced DeFi. So I don't know.
I was going to start saying DeFi. I kind of think that sounds cooler.
Okay. Well, you know, maybe we can have an audience vote at the end. You know, this is a pretty interesting time for compliance. People across the crypto ecosystem, regulations are starting to happen, and it's something I monitor very closely for my daily life. It seems to me that a lot of these rules happen because someone says, "Okay, what's the rule we have for traditional finance, for TradFi, TradFi, whatever? How can we most closely apply this to the way the world works in crypto?" Have I just broken this mic? And so you're trying to take a square peg and put it in a round box. You know, how well do you think that project is going so far in terms of getting the crypto world into these kind of existing boxes?
It's the biggest challenge, right? And this is not just DeFi; it's crypto generally. And that is, look, how do we regulate something without intermediaries or with significantly fewer intermediaries? The way we have always done anti-money laundering compliance and sanctions is you regulate an intermediary. You have a financial institution, a bank, and they file siloed reports to their regulators. They get a license. So really the challenge for regulators today is, well, how can we regulate in a world without intermediaries? And I think DeFi has presented significant sort of problems with that, maybe, well, significantly more problems than, let's call it sort of the centralized crypto space, because with centralized exchanges, you have intermediaries, right? You still have large exchanges to, you know, get a license to provide reports. And I think these are a lot of the issues that that DeFi has raised. And one thing that's really interesting, you know, there was a panel earlier with my colleague Isabella Chase and others talking about, you know, illicit finance issues or anti-money laundering. And really, I'd say over like the last 5 years, there's been this focus in certain areas, right? How do we write the travel rule? And we see that, you know, there's slightly different in the EU than it is in the UK. The US is sort of still really trying to figure out sort of how to address it. There are questions around how do we deal with what Grant Rabin, you know, called personal pizzas, right? What do you do with, you know, personal wallets in this space? Today, now, that seems to have shifted. And you have every regulator on earth talking about, well, how can we regulate financial crime, anti-money laundering in the DeFi space, and to a slightly lesser extent, NFTs. Right. And I think those are really going to be the two issues that are sort of the new frontier for regulators. And it's, if you really look across the board from MAS in Singapore to the US to here in the EU, everyone has at the most written a white paper, but it seems like we're now jumping into that conversation.
I mean, that's a really good example of how this could apply in DeFi, right? Because you know, you say, well, when we regulate AML and banks, you say you, the bank, are responsible for making sure you know who this guy is and that he's not great friends with Vladimir Putin or whatever. And that's where the obligation lies. And when you've got a crypto wallet provider, you say, okay, you're the kind of closest equivalent we've got to a bank. You're the entity we're going to regulate or sanction. And then you get unhosted wallets or however you want to call them, personal wallets. And there just isn't that, it's not obvious what you do. I mean, how are regulators getting to grips with that problem, and what would your advice to them be?
Yeah, I think what we have today in the anti-money laundering space, there's been more written. There was a great report in June from the EU. There's a terrific report from ADGM in Abu Dhabi. There's a bunch out there, just not a ton. But what they say today is, hey, most of you guys aren't actually decentralized. So just because you call yourself DeFi doesn't mean you necessarily are. So they basically say, hey, we're going to regulate you the same way we do a centralized exchange. But the reality is we're moving away from that model. And I think now we're seeing as a jumping off point, maybe moving from that conversation that I think FATF started in guidance about a year or so ago. Having that conversation is just because you call yourself DeFi doesn't mean you are. But I think now we're moving to, well, how do we regulate actual decentralized finance? Totally decentralized, on-chain financial services. And I think that's this challenge. And I think you're going to see more and more written about that. I have some ideas about maybe sort of how to think about that. But I will say they are real challenges. And I would definitely certainly not sit here today and say sort of we have that solved. And I think a lot of what we're going to be seeing from regulators is how do we study this? We're seeing risk assessments. One of the most interesting things we talk a lot in the US about the Biden administration's executive order on crypto and the hundreds of pages of response to it from a few weeks ago. Well, to me, there were really the two most interesting pieces of that executive order were requests for more. And the two requests went to Treasury, the US Treasury Department. One was for a risk assessment in the DeFi space, I think in the next 6 months. And then the one after that within the next 9 months was on NFTs. And that just says to me, this is exactly where this is headed. And if you want to sort of understand or how to skate to the puck, or we're in Europe, so I'll say, run to where the ball is kicked. I think that the reality is it's really thinking if I'm an NFT issuer or marketplace, or if I'm a DeFi protocol, how should I start thinking about compliance?
We saw a really good case of this in action earlier this year when the US Treasury sanctioned or attempted to sanction the Tornado Cash protocol, which they said was being used for money laundering. They said it was used to raise money for North Korean hackers, and they sanctioned it. I understand how you sanction a bank. I understand how you sanction, an oligarch. I don't really get how you sanction a software protocol. So how did that actually work? And do you think the Treasury got what it needed from that?
First, what's Tornado Cash? No, I'm just kidding. So Tornado Cash is really a really interesting case study, right? Because it's really the first time that any regulator has directly gone after a truly decentralized protocol, software, essentially. And really, look, it's so important. I spent about 15 years at the U.S. Department of Justice and the U.S. Treasury Department. And it's really important to understand sort of how regulators, particularly financial crime regulators, are thinking about these issues. And the reality is, within TRM, we saw about $1 billion of hacked or stolen funds by North Korea flowing through Tornado Cash. And that is the lens in which the U.S. Treasury Department and frankly, regulators and law enforcement globally were looking at this specific protocol. Now, look, it's just software. So it's not the fault necessarily of this protocol, but it was being used this way. And Treasury said, all right, how do we solve that problem? A $600 million hack on the Ronin bridge, or half a dozen or more other hacks. The reality is, 10 of the 10 largest hacks this year have all occurred in the DeFi space. And that is sort of what, hey, if we can cut off the money laundering, maybe we can stop the hacking. So they took action against what it considered to be an entity. But the reality is Tornado Cash was different because there were regular users who also wanted some degree of privacy in a more and more open financial system, right? I don't want people to see my financial flows. So I think that really is sort of the lens the Treasury is looking through, and it had real impact on regular users. And I think what it has really caused a conversation, which I think is a good one, and that is amongst sort of the DeFi community. It's the nature of this conversation. It's, hey, how do we do compliance? Can we stop sanction actors from accessing our protocols, from taking advantage of sort of this new ecosystem that we're building? And I think the answer is yes. And we've definitely seen sort of some movement really even since that designation.
So what next time Treasury has the next equivalent of Tornado Cash in mind, do you think they've learned a bit more about how they should go about that? Or do you have some advice for them about how they should go about that?
Yeah, I think they do have a better sense today, certainly, than they did 6 weeks ago or 2 months ago. And we saw that in a series of frequently asked questions, which I don't know were entirely perfect, but I think still helpful. And most helpful because I think they specifically laid out that they did not essentially intend to go after regular users who had some degree of sanctions exposure. But I think more and more guidance is critical, more and more engagement with the crypto industry, and really also not just laying out what not to do, you know, it's very easy to say, hey, you can't let North Korea, you know, launder funds through your protocol. But I think it would be a lot more helpful to say, hey, these are steps you could potentially take or that we recommend you taking if you're DeFi. They put out great guidance in October of I guess, last year on how centralized exchanges could potentially comply. I think we need that for the DeFi space. But we'll see. Look, I mean, in that designation of Tornado Cash, OFAC talked about, hey, we plan to go after other mixing services potentially. And I think that's going to be really interesting because to me, Tornado Cash is an outlier. I mean, there was an unbelievable amount of funds, particularly in the North Korea context, which remember, hacks are really bad, right? Like no one wants to be hacked. There's people's life savings in those funds, but it's really bad when you're North Korea and you're stealing $600 million to fund, you know, weapons proliferation or ballistic missiles. And I think that was the national security implication. What I'm curious to see is whether it's again a significant national security concern, the next designation, or in fact, they're going after this type of technology. My guess, and it's only that, is that they are very focused on sort of the massive amount of illicit activity, not the technology itself.
Okay. I guess a lot of people watching this are feeling a bit conflicted because, you know, the crypto mantra is quite libertarian. It's about, you know, you don't need the state anymore, and you can work in this distributed way that doesn't need government telling you what to do. On the same time, you've obviously got a lot of people who are kind of annoyed that their funds got hacked or they got rug pulled, and that the money just disappears and there's nothing they can do about it. What would you say is the right way for people in the crypto community to think about compliance?
Yeah, look, I'm conflicted. I've gone back and forth on this. I think when I saw the designation, frankly, first happen, I said, good, let's cut off, you know, funds to North Korea or their ability to launder funds. And I think more I really sort of thought about it, I had real concerns about going after technology or software sort of in this way. And I think where I land is that there really needs to be a balancing. And it's figure out how do we stop illicit actors from engaging with this ecosystem without dramatically affecting regular users. And I think Tornado Cash has started a really interesting and important conversation. You know, after 9/11, we had this conversations in airports and city streets, right? And I think today we're having it on blockchains. How much privacy are you willing to give up for security? And I think it's a really important conversation because look, you know, in the age of the internet, a hack meant the loss of, you know, PII, right? Usernames and passwords. But in the age of crypto, it means the loss of someone's life savings. And we need certain protections in place, particularly cybersecurity, to stop that from happening. But at the same time, you don't want to affect regular users who don't want their employer to know how they're spending their paycheck, or they don't want, you know, someone following their funds when their ETH address is, you know, out there on Twitter. So it's got to be a balancing, and I'm hopeful that regulators who are, you know, at least look. I mean, I think we're seeing the beginnings of what I hope will be a thoughtful approach. Right? We're writing, we're consulting with industry, and we're having this kind of conversation. We'll see how it all plays out.
Here's hoping.
Here's hoping.
To move from North Korea slightly further north, you know, Europe has been quite understandably this year obsessed and very centered on the war in Ukraine, and I'm quite interested in how you think that's influenced this debate, because, you know, on the one hand, you've seen Ukrainian ministers on TV saying, "Send us your crypto; it's a really useful way for us to raise funds," but the other side have been able to raise funds for it as well. Russian paramilitaries have raised funds using crypto. And the EU has sanctioned Russians' access to crypto wallets because they thought it was a way of you know, escaping sanctions. Do you think that's kind of shifted the debate?
Yeah, I thought we were only going to ask easy questions today on this panel.
I never promised.
I'm just kidding. It's hard, and I think the war in Ukraine has caused all kinds of conversations about how crypto could potentially be used to move funds outside of the traditional financial system for good and for bad. And I think we're seeing that play out, right? You know, immediately following the invasion of Ukraine, there was this narrative around, can the Kremlin use crypto to evade sanctions? And I think very quickly, there was general consensus amongst industry and the public sector that they can't, right? There's not enough liquidity in the entire cryptocurrency market to fund a G20 economy, you know, and an ever increasingly expensive war in Ukraine. But we knew that Russian actors oligarchs and others would try to use crypto in smaller amounts to evade sanctions. Why? Because as a prosecutor for a long time, they always do, right? High value art, real estate, shell companies, and bulk cash smuggling. So we knew that. And I think what we've seen play out over the last even few months is that we've seen Russia paramilitary groups use crypto to attempt to move funds. But we've also seen the ability to move funds to donate to efforts in Ukraine. So I think the reality is that I hate the term crypto crime, and people use it, but the reality is crypto is not good or bad, right? It's just money. And I think here we're seeing that play out. Like, there's a very good use case for this technology, and there's people taking advantage of this technology. And at the end of the day, it's just that. And regulators need to continue to be technology neutral when they're regulating it, because it's not good or bad. It just is a way to move funds, cross border at the speed of the internet, which I think has tremendous promise.
Mm-hmm. One of the suggestions I saw made last week, in fact, was that you could have rules for DeFi that would be voluntary. So, the classic kind of AML rules are all very compulsory, and there's an element of risk assessment and an element of judgment. But if you are an obliged entity, then you are obliged. You have to do certain things with the money that you process. And this, it was an academic writing to the EU saying, oh, actually, this isn't going to work in the decentralized space, because people can just not do it if they don't want to, and you never know who they are. They're anonymous. So you need to encourage people to follow these rules. You need to give them a kind of public seal of approval that will encourage customers to come to the people who are licensed and regulated and recognized. Do you think that's an approach that could actually work?
It's interesting. You'll tell I'm a fan when I tell you I read the very good article you wrote on that topic, and I thought it was an interesting approach. I think that obviously you need a significant business reason for industry to want to adopt an approach like that. I think one interesting business reason today is that institutional investors are less likely to engage with decentralized finance, if it's not regulated, or they don't have controls in place, or you don't know who you're dealing with. And potentially some type of either walled garden approach or voluntary, regulatory framework could allow for institutional investors to get maybe in the space more quickly. That sounds to me like a significant business reason. But the reality is, not all DeFi has, people making those kinds of decisions, taking a business approach. But I think you're going to have incentives. I can think of a number of more. There are a couple other examples in that article. But to me, that's the most interesting one, right? Like, are institutional investors going to get into DeFi without either regulatory clarity or something that really helps them understand sort of who their counterparties are, who they're dealing with?
Yeah. I mean, you mentioned before that some regulators are just in denial that decentralized finance exists. They say, well, there must be someone in the center. It's hard getting regulators to change something they've used for decades. What do you think it would take to change that mindset and make people think, oh, actually, maybe there's a different way of doing this?
Look, I mean, again, I'm slightly biased, having been a regulator, and I think something we were always anxious to do is have conversations with private sector. And I think now in the private sector, I think we've done a decent job of moving the needle in that conversation. I think Tornado Cash actually was potentially very helpful there, because I think regulators globally saw what happened and really how hard it is to regulate in the DeFi space, and kind of ultimately what the backlash could potentially be. I will tell you that I think industry globally has engaged with Treasury around that issue in particular, and also sort of global regulators. So I think, look, if there's any silver lining from that, I think you have two things. One, you have DeFi protocols from small ones to sort of much larger ones, working with TRM and others in the space to figure out how can we at least screen for sanctions on our front end, right? Everyone has a website. How can we stop bad actors from engaging with us, at least through our website? I get that it becomes a lot more complicated beyond that. So I'd say that's sort of the one piece, is that you see the industry, working on compliance in the space. But then the other thing is, I think there has been some level of education that's come out of this for regulators. And we'll see. I mean, like I said, I think we're really, we are pre-day one when it comes to where DeFi regulation will ultimately land. I mean, today we're seeing white papers, right? I mean, how long does it usually take for a white paper, wherever in any of this, to end up being something that we actually see in practice? And I think we're still at that white paper stage.
Yeah, yeah. I saw the Financial Action Task Force, which is the kind of global money laundering standard setter, had its plenary session last week, and the president, whose name escapes me, the guy from Singapore, said at the end, oh, you know, he was asked about crypto, and he said, yeah, but these jurisdictions just need to implement our rules. Do you agree that that's all that needs to happen, that you need to implement? It sounds like it's more improve than implement.
Yeah, I think it's a combination of things. I mean, if you talk to FATF and you engage with FATF, I think they're essentially laser focused on implementation, right? You ask sort of what their 3 priorities are in the crypto space. It's implementation, implementation, implementation. But the reality is, I think their members globally now, everyone from, you know, JFSA in Japan, MAS in Singapore, you know, in the UK, here in the EU, financial regulators are all focused on DeFi and NFTs, and have sort of moved on a little bit from this unhosted wallet or, you know, personal wallet conversation that I think really is what FATF is focused on for a long time. And when they talk about implementation, they're really talking about how do we implement for the, you know, for sort of travel rule.
Yeah.
And I think we'll see. I think that it would be helpful to probably have more. I imagine that the Virtual Asset Contact Group within FATF will be providing more guidance and standards around DeFi and NFTs, but we'll see. I will say just real quickly, I think FATF was really the first to talk at all about DeFi and NFTs, specifically about a year and a half ago, and that has actually been part of the jumping off point to this regulatory conversation. So I think that's certainly something helpful and something to sort of point to.
Mm-hmm. I see we're getting to the end of our time.
How is that possible? Did we just get up here?
Huh?
How's that possible?
I know. I mean, time flies. But okay, another story I saw last week that I thought was pretty interesting, and maybe just kind of for a final thought for our audience, was Interpol, that the International Police Agency is building something in the metaverse, a police training college, I think it will be, and you can even do a virtual tour of their headquarters in Lyon. I have no idea why anyone would want to do that, but you know, maybe it's a useful way of training police officers or whatever, and you know, perhaps people within the sector might start actually going into the metaverse or into kind of into the online world in order to find out more about policing and AML. Do you think that's a gimmick or the start of a trend?
I think, well, I don't know about start of a trend. I think it's both. Where's Robert? We should have the Blockchain for Europe office in the metaverse. I think you need to work on that. Look, I think that there's this really interesting way where law enforcement globally is trying to figure out how do we engage with this space. And I think this is just an example of this. I think it's probably more cute or clever than anything else. But I will say that Interpol in particular has been laser focused on training and capacity building globally in the crypto space for a number of years. How do we use tools like TRM? How do we train law enforcement on these types of issues? And I think that sort of this is a cute way to really engage more in that. But it's definitely been a focus. And I think, look, you know, law enforcement for years, everything from, you know, local policing, right, street officers, how do you engage with your community where they are? And I think this is Interpol taking that maybe sort of that Web3 step further. But look, I think if nothing else, it's very cool. I want an office in the metaverse.
Right.
Yeah.
Don't we all?
Yeah.
Well, we've come to the end of our time. I'm really sad that we didn't get a Hannah Montana quote. The last guy's got a Hannah.
I usually
Montana
have a little pop culture in here. That was
okay,
yeah, I didn't get into that. Yeah.
But you know, instead of that, we had a really fascinating chat
awesome.
through a really complicated and difficult topic. But you made it all sound very easy. So thank you very much.
Terrific.
Ari.
Thank you. Yep.